Okay, so we're going to have a look today at accruals and prepayments. Accruals and prepayments are adjustments that we make to our final accounts. So essentially they adjust the trial balance or the figures within the trial balance so that we can adjust our profit and loss and our balance sheet, our income statement and statement of financial position, if you want to use the modern terms. So we've been used to seeing blank expense accounts at the start of the period. When we make a payment from the bank, we credit the bank and we debit the expense with the amount that we paid. At the end of the year, we then transfer that out of the account by crediting the expense, and we'll debit the profit and loss, which puts the expense on the income statement. However, before we prepare final accounts, it's often necessary to adjust the figures in the trial balance because we might still owe money for items that we've used in the financial year. We might have paid for some items in advance, we might be owed some revenue, or we may have paid revenue in advance. Now, when we're talking about expense accounts, what we need to think about is when did we use the item? Okay, so it's very important that we match the expense that we used to the financial year in which we did use it. We're not bothered about when we paid for it. We're bothered about when we actually used that expense. And that can tell us whether to debit or credit the expense account. So just as a little example, we might have paid £8,000 for rent during the year. All right, so we would credit the bank, debit the expense account. But if we have £2,000 extra that we still haven't paid for, we would still need to debit the expense because we would need to show the amount we have used of that expense in the current financial year. By the same token, if we paid for something in advance, then it doesn't belong to this year, it belongs to next year. So it will go on the credit. If we still owe money for last year, again, that would appear on the credit. So as we go through this, what I want you to think about is when did we use the expense, not when we paid for it. That's very, very important. It's about when you use something and not when you paid for it. If you can get your head around that, then the topic can actually become relatively straightforward. So debit this year, credit last year and next year. You get that, you're halfway there. So we'll start off with what we call an accrual or an accrued expense. This is an amount that has not been paid for expenses. So we've used the expense, but we have yet to pay for it. It should increase the expense for the period, and it should also appear as a current liability in our financial statement. So on the statement of financial position, this amount will appear as a current liability, showing that we owe somebody some money. For that reason, it's sometimes called other payables. So here is a quick example. So we've got a year end of the 31st of December. At the very start of the year, we owed £400 for electricity. So on the very first day of the current financial year, we owed £400 for electricity. During the year, we paid £3,000. And then at the end of the year, we still owe another £250. So put that into our T account. So the very first thing we would do is we would bring down the £400. That is for last year. Remember that we owed £400 for last year, so it goes on the credit. We then paid £3,000, so we'd credit the bank, debit the expense with £3,000. Now already that's going to affect our transfer figure, because when we come to balance that off, the £3,000 will be the £400 will be deducted from the 3,000. So we know that of that 3,400 of it related to last year. Now, at the end of the financial year, we still owe £250 for electricity we've used this year. So it goes on the debit. So we can then balance off that account. You can see there we've got £2,850 as the amount of the expense. So even though we paid 3,000, of that 3,000, £400 of it related to last year. Plus, we've got this extra £250 that we have yet to pay for. So the total amount of electricity used during the year was 2,850. So you can see there that the amount owing at the end of the year, that £250, is carried down and then brought down. And it's simply brought down so that next year when we start our accounts, we have knowledge that we owe £250 still for electricity. In the same way as that £400 there would have been carried down and brought down into this year's account. But it's just to give us a little reminder, we still owe £250 for next year. So anything that we pay, we'll have to include that £250 in the next financial year. Now, there is a strange bit of a situation that happens here in that we've got a carried down and brought down, but we're going to kind of do a triple entry in a certain way. We've got one entry on the 250 and the carry down. We've got a second entry or a double entry on the 250 as a brought down, but we're going to do a triple entry. So we're going to do 250. We're going to put to a current liability, which we can see on the next slide. So at the end of the year, because we owe it, it's a liability. So it's going to go to an accrual account as a current liability. Right? There you go. So that is how you deal with an accrual. Just to quickly nip through that again, we brought down what we owed last year on the credit. We put the amount paid this year on the debit. And the amount that we still owe at the end of the year of 250, that goes on to the debit as well, because we've used that this year, even though we haven't paid for it. We simply balance off the account at 2,850 as our transfer figure. And then we also bring down that 250 underneath the totals. So the 250 also becomes a current liability on the balance sheet. So that's where you owe someone some money. But this time, on prepayments, we might pay for something in advance. All right, so when we pay for something in advance, it means we haven't yet used it, but we paid for it for the next accounting period. Now, a prepayment will reduce your expense. And the prepayment will also appear as a current asset in your financial statements on your balance sheet. And again, because it's a current asset and it's something that we are owed, because we're owed a service, we can call this other receivables. So here's an example. On the 1st of January, insurance of £300 had been paid in advance. So at the very start of the year, £300 had been paid in advance. So we're going to use that in the current financial year. Remember, we don't care when things were paid for. We care about when we use them. During the year, we paid £2,000 for insurance, but that includes a prepayment of £100 for the year beginning 1st of January 2021. So we're not going to use that £100 until the next accounting period. So in putting that into an account, we bring down the £300 that we paid in advance. We're going to use that this year. Even though we paid for it last year, it gets brought down on the debit because we're going to use it this year. We'll then credit the bank with 2,000 and debit the insurance account with 2,000 to record the movement of money. And then at the end of the year, we've paid £100 in advance for next year. Again, we're going to do a triple entry on this carried down, which you'll see. So there's the first entry. And we've got the second entry where we bring it down underneath the totals. So the carried down of 100, because it relates to the next financial year. So we bring it down. So at the start of the next financial year, they'll know they've got £100 worth of insurance to use. And that balances off as our profit and loss figure of 2,200. So it becomes a current asset on the balance sheet. So we paid for something in advance. Even though we've lost the money, we are now owed insurance. So it will become a current asset on the balance sheet. Now, that is a basic layout for an expense account. The only thing I'm not putting there is the transfer figure that would go on the credit side. Right? But you can see that if you have a prepayment at the start of the year, it will debit the account. If you have an accrual at the start of the year, it will credit the account. Payments made on the debit, and then your closing accrual. So if you've got an accrual or an amount owed at the end of the year, it'll get carried down on the debit, brought down on the credit. And if you have a prepayment at the end of the year, that will get carried down on the credit, brought down on the debit. Don't forget to put your transfer figure on your credit as well. I haven't put that in because maybe I forgot. I just didn't want to put it. Okay, so that is what happens with expense accounts. So you've got your this year, next year, last year. Let me go all the way back to it. And that's on the debit. This year, last year, and next year on the credit. Now, let's go all the way back. So revenue or income accounts work in a similar way, though due to the rules of dead click, everything will appear on the opposite side. So this time, because remember we debit expenses to increase them and we credit revenue accounts to increase them. So this time, this year will be on the credit, next year and last year will be on the debit. So prepaid income. So that represents an amount that we've received for income that relates to the following accounting period. It will reduce the income account and also create a current liability in our financial statements. And it creates a current liability because they've paid us and we now owe them a product or service. So let's have a look. Oh, sorry. Yeah, they're called other payables. Animations. So prepaid revenue. So 31st December is our year end. And on the 1st of January 2020, rent receivable paid in advance was $350. So we've received it in advance at the very start of the year at $350. During the year, the business's rent received was $2,500, but that includes £500 worth of rent for the year beginning 1st of January 2021, which is next year. So putting that into an account, we're going to bring down the balance of $350 onto the credit. And that's because they paid us in advance on the 1st of January 2020. So they're going to use that this year, or we're going to have to give them the product this year. So because it's an income account, it goes on the credit. We then receive 2,500 into the bank. So we would debit the bank, we will credit the rent received account. At the end of the year, £500 has been paid in advance to us. So we receive £500 in advance. Now they're not going to use that service until the following year. So next year. So it goes onto the debit side. So in balancing that off, we've got a total of 2,350 as an income to put on the income statement. and we would add that underneath gross profit. Again, we'll do a triple entry for the carried down. So we've got the carried down of 500, we've got the brought down of 500. So that's 2, but we're also going to do another entry off this 500. Now, every single time on these accruals and prepayments, the double entry comes off the carried down. So it's going to end up on the credit side of a prepaid income account. So that is a current liability. Now, even though we've received the money, we owe a product. Therefore, it's a liability. All right, so we owe them this rent. So we've got a liability of something we've got to give to somebody else. So that's another reason why these are also called other payables. It's not for stock, but we owe somebody money or a service, so it can be called other payables. We also have accrued income. So that is an amount of income that's not yet been paid for, but has been used. It'll increase the account, and this time it will create a current asset in our financial statements. Again, this time is called an other receivable because we are owed money for a product or service that's not our regular stock. So, commission receivable is owing at the start of January of £400. During the year, the business receives commission of £1,500. However, £500 of commission is still owed to the business at the 31st of December. So at the end. So we're thinking about when is this going to be used? Not when it's paid for, when it's going to be used. So if at the start of January, we were owed £400, and that's the very first day of the year, they must have used that last year. So it goes on to the debit of an income account. Then receive £6,500 into the bank. So we'll debit the bank, credit the commission received. And then at the end of the year, we're still owed £500. So if at the end of the year we're owed £500, that relates to this year. Because we've used it this year, you just haven't yet paid for it. So in balancing off the account, we've got a profit and loss amount of 6,600, which goes underneath gross profit again. But we've also going to create a current asset on the statement of financial position, because we're going to do the double entry off the carried down, even though we bring it down. So we're going to do a double entry into an accrued income account. So we are owed money. So therefore they are a current asset. They have to pay us that money by law. So they are a current asset. That's money that we're going to receive. So for a revenue account, that's your layout. Your prepayments are brought down on the credit. Your accruals are brought down on the debit. At the end of the year, your prepayments are carried down on the debit, and accruals are carried down on the credit. Don't forget to do those double entries to the asset and liability accounts, though. Otherwise, you'll lose half the marks. So just to be clear, just to quickly go through it. So that is an accrual. They're amounts that are owing, outstanding, or accrued. All right. So in this one, we're going to have a little look at the effects on the financial statements again. So the effects on the financial statements are where it's an accrued expense. The amount owing is added to the amount shown in the trial balance or to the T account. And that gives you the total that should be paid for this year. And on the statement position, it becomes a current liability. Just to show you that. In our trial balance, we've got £1,000 for electricity on the debit, but we're told that there's an accrual of £300. The amount that goes on the profit and loss would be £1,300. The accrual adds to the expense. Also on the statement of financial position, we will create that current liability of £300 because we've still got to pay for something, and a liability is a debt, so we'll create a liability. Prepayments, the opposite of accruals. So this time it's when, particularly for an expense, we might have paid for something that finishes later than our financial year end. So here we paid rent up till the 31st of December, but our financial year end is the 31st of October. We'll have prepaid 2 months worth of expense. So where we've got a prepayment, this time it reduces or subtracts from the amount shown in the trial balance and creates an expense on the income statement, whereas for the statement of financial position, it becomes a current asset. So we've got insurance of £1,200. It's been prepaid by £200. That would reduce the value of the expense in the profit and loss and also create a current asset on balance sheet of 200. All right. We have paid for something we have not yet used, so we are owed that product or service. That's about it. Any problems? Give me a shout.